All
All
right.
right.
We are live, man.
Live, live, live. All right, let's do it.
How you doing, Brandon?
I'm doing amazing. How are you doing?
Good, brother. Well,
Awesome.
I'm excited for today. Let's see. We'll give it a few minutes. Let everyone
Yeah,
get situated. Get on here.
let's do it. I'm so excited to do these because, you know, the people that are joining, and no matter what industry, if you're in real estate, if you're in lending, if you're just a first time buyer, whatever you are, if you're coming this, you're coming to learn something. And me, myself, I'm going to learn something from this just
Yeah.
by doing this. And so you guys are my tribe. Everyone that's joining here, everyone that's involved in this, me and Bryce are on the same wavelength on this. We both love learning, go
Yeah.
out of our way to learn as much as possible. And that's why we do these to give back. And so I hope you guys get at least one little nugget from tonight, and you can use it going forward in your adventures. And that's really why we do this. So I'm really excited to do this, and I know Bryce is as well.
Absolutely, man. No, dude, it's a blessing to go live and kind of just talk to people, right? Kind of share, educate about the process. So today I'm excited because we're going to go over really like the home buying process, the home buying journey, some high level conversations. And it's super exciting. So we are streaming all over today. We have already have several people that are on board, kind of checking things out. So I'm excited to dive in. We are going to have a 2 hour window here, but obviously we wanted to leave some time. There is a comment section for those. So if you are commenting, leave those behind for us and we'll get them answered as well. But let's see here. Making sure everything is situated on, we got LinkedIn, we got Facebook. We're on everywhere. I love it.
Awesome.
This is the awesome part about technology, man.
This is cool. This is cool.
Just like 5-year-olds hanging out having a good time. But
Yep.
sweet. Okay. Well, let's do this. I'm going to dive in. I am going to figure this one out. Mm-mm-mm. Boom.
The simple process of buying a home.
Share screen. All right. The future to buying a home in 2023. Who would have guessed that it would be 2023, to be completely honest, right? Um, let's get into this window. Go ahead and share here.
There we go. I got it. The future to buying a home in 2023. Here we go. Let's do it.
Awesome, guys. So, for anyone that's on here, we will get back to the front of this screen. Feel free to scan the QR codes. These QR codes are going to take you to all of our full contact information. Both Brandon and I are really very active on social media. We're sharing educational videos and content, and honestly, also get kind of a day in the life. Brandon loves to get out in his community and share. He showcases a lot of restaurants. He loves to drink good beer, hanging out with his dogs, his fiance. Same as me as well. I might not show as many restaurants as him, but that's exciting, man. Dude, I'm excited, brother. I'm excited to have you on today, for me to be with you.
Yep.
But could you share just a little bit about kind of yourself? And I know we'll do a quick like about us and kind of our journey.
Yeah.
But what excites you today, man, as we go into this
Yeah.
kind of future buying a home?
Yeah, likewise, likewise. I'm glad to be here with you. Yeah, just a little bit about me. I'm very passionate about helping first time buyers and buyers in general just achieve the American dream of buying a home. And I went through the same journey myself, being young and not knowing how to buy a house, and so that's why I started focusing my whole
Yeah,
career on first time buyers. So that's what I do. That's why I'm here, and that's why I'm excited to do this. How about you?
man, I love it. Awesome, brother. All right, man. Let's go ahead and dive in here. So we got again those QR codes, and they will be shared as well. Sweet. So one of the big things here is like congratulations to the people, right? Taking the first step of purchasing your home. I think at the end of the day, like you got to make the decision, right? So
Yeah.
that's one of those big pieces.
Yeah.
Today, quick snapshot for agenda for those that are on. We are going to do a quick way to welcome, goals, introduction. We're going to do a quick overview, just like the home buying process, snap of the real estate market, some overview, some updates, some trends, a snapshot of like the real estate market update again, update with trends, part 1 and part 2. One's a little bit more real estate, one's a little bit more mortgage related. And then we'll have a quick open for discussion as well. So Brandon, I'll let you take and introduce yourself, brother.
All right. Well, for I guess a deeper dive about me, like I said, at 18, became really interested in the home buying process, and that's actually when I became a realtor in 2016. Not to give away my age, but that was me in community college, not really knowing what I'm going to do with life. But I always thought I was going to be a business owner, and so this was kind of the path that my now fiance made me go down, because she told me to get my real estate license, and here I am. So she had it just a year before me. So props to her, and her mom's been doing it over 45 years. So real estate, royalty. I was born and raised in the San Francisco Bay Area, more specifically San Jose, born and raised. Like I said, I'm really passionate about helping others, especially helping them get the American dream of purchasing their first home. And Bryce kind of touched on a couple of things I love to do, but I love being active, working out, playing basketball, watching sports, and of course traveling and grabbing a beer with great friends. So that's me. And let's learn a little bit more about Bryce.
That's it, brother, man. Well, we will get into a little bit about me, but we kind of have our personal journeys. Might have flip flopped these cards, but essentially, I love this, right? So down below, you guys, Brandon and your fiance, dude, still can't hang with this Rams jersey, but that's okay. 49ers all the way. But you guys bought your first house, and I know that this house was a journey. Like you said, it took time. We got a process. I think that's one of the coolest things. Like, it's not an overnight thing. It doesn't happen overnight. It's not, and it might for some people, but there are people that we've worked with for 2 years before they were either ready, the right house, whatever. Everything that we go through in life is all about timing. Whether it's a decision to buy a home, whether it's a decision to, have a family, whether the decision is to do anything, it's all about timing, right? So this is me and my fiance at the top here. We actually bought our first house. We're from the Bay Area as well, and I'll recap about myself. But we bought our first house out in Goodyear, Arizona, and so this was the day we got our keys. We're dressed, ready to move everything because we had just moved half of it already over to the house. Yeah. So it wasn't like we were like prep. We're like, cool, we get to go take our 2-bedroom apartment and load it into this 4-bedroom house and then figure out how to spend more money. So it is a process. Obviously, Brandon, you're a top producing real estate agent, got some really cool awards, kind of on that luxury team, kind of come down from a whole 9 yards as well. So was there anything about your journey, kind of recapping through these photos, like that moment right there where your hands up, you're like, dude, we did it. We got this house. Like, what was the biggest, like, kind of like learning lesson or sigh of relief per se?
Yeah, I think the biggest thing was going from, I think it's impossible to buy a house, to, hey, it actually happened. Everything happens for a reason. Every path, every journey you go down, and once you get to that final point, you're like, whoa, I actually did this. It's actually real. It's actually possible. This isn't just stuff you see on TV, not just HGTV. This is me. So yeah, there was the realization that this is so possible, and it was amazing. It was an amazing feeling.
Love it, man. I feel that. So a little about myself. My name is Bryce. I'm I'm a licensed wealth coach and mortgage strategist based specifically in California and Arizona, but my team can expand out to pretty much half of the country, if not more. I've been in the mortgage and financial industry for about 12, going on almost 13 years. This is literally all I know. So really, it comes down to, like, my goal is to really help people through this whole process. And it doesn't have to just be buying a home. It's creating wealth, right? So really, in a lot of ways, for me, like, my mission statement is helping people create and protect generational wealth through financial education. And that financial education, a big, big part of that does come into real estate. But there are multiple pieces. There's more than one way and more than one thing that come down to it. So I think it's important to know, like, there is a lot of experience between the two of me and Brandon. We help families, just whether that's with tax strategies, buying a house, protecting it, putting it in a trust, making your estate plan. From start to finish. That's kind of the goal, is to never leave a stone unturned in your journey of buying a home and creating wealth, which is awesome. So, like I said, originally from Santa Cruz, California, and we bought our first house out here in Goodyear back in August of 2022.
I think one great thing I will add on to that is that I think we're such a good team because we come from two completely different perspectives when it comes to this whole journey, everything. And
Mhm.
so we can have a very, good conversation, even if we believe two different things, and we'll wind up in the middle somewhere. So I think we both have two different perspectives on things, and it helps a lot of different people kind of, narrow down on what they really want. So I think we both bring a pretty unique, expertise to this. So that's why we do this together and why we work as a team.
I love it, man. No, that's very true. I actually think about that. A lot of the clients we help, like, they're totally different people. There's very
Yep.
technical. There's very, like, just kind of
Yep.
normal dudes or normal couple or family. Like, it's just kind of a mix of everybody.
Yep.
And that's the best part. It's
Yep.
available for everyone. So, quick snapshot. So we'll get into a little bit of the education piece, right? So, brother man, I'll let you explain what you do.
Yeah. So what does a realtor do? I know that you see it on TV. It looks like it's such an easy job, $1 million listing, all that stuff. But really what we're here to do is we're really here to advise. And at the end of the day, educate you about everything that's really going on, what's going on in the market. How do you really buy a house? And really, we want to make sure you get what you want and what you need, ultimately
Yep.
need, not necessarily what you want. You'll get a lot of wants, but not all of them, but what you need. And we'll make sure you get a home that fits you. And so, once we do that, we coordinate with all our other professionals like Bryce and couple other people in the transaction. We negotiate on your behalf. We handle all the paperwork, the contract, everything. We explain what you're signing, so you know exactly what it is. And there's a lot of stuff in there, so we want to make sure you're following all the deadlines.
Yep.
You're making sure you hit all those dates on the right time. And there's gonna be a lot of problems that arise. It's not a simple process. So that's really where we come in, is we are the problem solvers, and we
Yep.
make sure everything goes accordingly. So we're really there to help advise and make sure you're all good and all set to go on your home purchase.
100%. So that's what the real estate agent does. Actually, it's interesting to me, kind of like perspective of, being on the financial side of, like, there really is good and not so good real estate agents, right? And so, and there's
Yes.
the same thing with loan officers, with, financial advisors, like, in general, right? And so
Yep.
what's interesting to me is when I look through that, it's really, you know, where you're a therapist in a lot of ways, your
Uh-huh.
data, but there's a lot of information that you provide. And I think you get really specific with your clients and you really show them what they're going to do. And I know right now is a big time of scaling your business for you and, like, really implementing systems so you can help more families on a very personal level, but it's very efficient. And
Right.
so there is a part where people, it's a emotional transaction, but it's got to be driven. The decisions that are made might feel emotional, but the final pull of those numbers, a lot of that's got to be data driven as well. So
Yep.
I love kind of that good mix that you definitely have.
Right.
That's a lot of how it was. So for me, guys, as a loan officer, most right hand side, right? I mean, we'll educate you around the mortgage financing, right? And like I said, financial education, right? And so that's one of the biggest pieces that comes into play. This is your biggest asset for most people, and is also your biggest liability, right? You would think that we need to talk about a few more things than just, like, what's your rate, what's your cash close, what's your payment. That's important. Don't get me wrong. But there's a lot more that goes into this because it is the biggest impact on your financial life that you will ever make for 99% of the people that buy a
Yep.
home, right? So facilitating a loan from pre-approval from start to finish. So that could be, we start with a consultation. My business partner, teammate Eli, will typically take over, kind of get some paperwork together, clean things up, make it all look pretty. So that way we know exactly how strong it is for your loan. We get together, we do a strategy call, we share some information, we kind of do a Zoom, we'll explain everything because we want to respect the fact that most people that are getting to a point of buying a home, they're kind of a master of what you do, right? Whatever that is. So it's just giving you that respect to know that you have that. Coordinate everything as well. I think once you're in contract, at least, that's really when we become the quarterback to kind of manage most items behind the scenes. And Brandon will facilitate a few things still that are pending, but a lot of times it's just kind of this big concierge personal process through the whole thing. And honestly, half the time I feel like we're therapists more than consultants.
And just so everyone knows, we're all working on the same team together. We're all trying to go towards the same goal. Both of us, we have two different things that we're working on, but we work together trying to get this all for that goal of getting that home. And I will agree with you. There's a lot of bad loan officers out there and financial advisors, especially when you start to talk about any commission-based, job. There's going to be people that are just in it for the money. And, that's good for them, whatever. And most of them are getting out of the business, as you've probably seen. A lot of agents, a lot of loan officers I haven't heard from in a while. So it's interesting when things get a little tighter, when you're only going in it for the money, not for the people. So
Yeah.
definitely make sure you're going to work with someone that's in it for you.
Yeah. There's no 6-figure W-2 paycheck.
No.
Awesome. It's a snapshot about what we do. Cool. So making the decision to buy, right? Really, when it comes down to it, buying your first home is an emotional choice. It really is, right? A home represents your unique taste, provides kind of a haven of stability, security for both you and your loved ones. And you think back to a little bit of those memories, right? It offers a huge pride into something that you can call yours. And I would say probably 75% of the people that we talk to and have consultations with, and we will have on times 20 or 30 plus a month conversations with people just to talk about the process of buying a home. And so when you go through that, it's like, well, I want to buy a home because I don't want to pay rent. Cool. Love it. I want to buy a home because I want to have something that's mine. Even better. Love it even more. Right. But then it comes down to like kind of this emotional decision that people have to make. And I'm starting to think back on it, right? Like we all had that memory in like Christmas or a birthday or something at a home. Yeah. And so when you start to think of it a little like that, you're like, man, like if you have a family or want to have a family, think of those memories that you get to start to create, because that's also a big piece of it. Like that kind of understanding of that piece, it really becomes emotional. But in the end, it still has to be a rational decision, right? You can't go and spend 90% of your income on a mortgage payment. It's illegal, not possible in 99% of cases, but homeownership provides you a grow wealth via equity buildup, right? You're paying down the debt, the value appreciates, there's tax benefits. You talk to us and our team about tax strategies and maybe creating more income. And creating more income doesn't mean actually creating, sometimes it maybe just means alleviating taxes, right? So a house doubles, if not triples, your capabilities. We had personal experience from this last year when we bought our house. I had my LLC and geez, the CPA went crazy and like all legal, by the way, but like it made a huge impact on our financial decision, and it became the emotional decision turning into rational, turning into straight dollars. It was pretty awesome. Now, when you guys bought your first house, did you guys see any real big benefits from any of that information as well?
Oh yeah, totally. Not only is a house your most likely biggest asset, it's your best asset. Because it's going to be the one that it most likely appreciates the best for you. And on top of all the things you already talked about, the tax benefits, everything like that. So there's so many benefits to it. We won't bore you with them right now, but there's definitely the emotional side that I won't forget. That was just it does get you in a hole sometimes. You're like, oh, I want this one. It's just so perfect. And it's like, wait, I got to step back. This is an investment. At the end of the day, there's both sides to it. So we always have to think of both sides.
100%. I do loans for a living, and it was still emotional and stressful at times. And my team did my loan, so I could see everything, and it was still emotional and stressful. So don't get me wrong. I understand that, and I respect that even more. Perfect. Here's a quick snapshot for you guys that are going to kind of see this. Take a picture of this, kind of look at this. 8 steps to home ownership. I love this, right? We just talked about it. I think one of the most important pieces, decide to buy, right? Yeah. So you've made the decision. You're going to buy. You're going to do that. Now assemble your team, right? Bryce, Brandon, you're good to go. We'll take care of you. We'll get you connected, right? And that's the 2 people you'll deal with the most, at least up front. But when you combine inspectors and vendors and underwriting and processing, you'll end up not dealing with about 25 other people. But assemble your team, people that are going to give you a really good experience. And then we talk about this, right? We secure financing. There's a whole process. Pre-approval. We'll go through a quick snapshot of what the pre-approval process is later on in the slides here. And then once you have your loan, boom. Now's the fun part. You get to go hang out with Brandon
Yeah.
and look at some properties. And Brandon, I'll let you finish off this bottom line.
Yeah, we're gonna go. We're gonna look at some properties. Once you find that one, like, all right, this is it. This is the home for me. Fits all. Fits most of those needs, not all
Yeah.
those wants. We make an offer. We're gonna make an offer that's gonna win. We're gonna write a winning offer, and the seller's gonna go ahead and accept that. Once we get to past make an offer, seller accepts it. That's when we gotta go down the line of what's in this house. What do I need to know about this house? We want to make sure that we get inspections if there's no inspections up front. We want to make sure we read all the disclosures, make sure we understand what is going on in this house. What does the seller know? You just basically want to do all your investigations to make sure you understand everything about what you are buying, because it's a big asset. So make sure you do all your investigations, all your inspections, and of course you want to insure the property. Of course, you're going to have homeowners insurance, but make sure you know where that home is. Is it in a flood zone? Is it an earthquake zone? What's going on there? That's all in the disclosures that your great realtor will help you with. And so that's what we do there. Once we do that, we get to sign the docs, and that's one of the fun, one of the best parts of the home buying process. A little stressful, a little long, a little annoying, but it's such a good feeling because you are signing your life away to this asset, saying, I am buying this home and it's going to be yours. And so it's a fun process. It's a little lengthy, but once you get through it, it's such a pride of home ownership. And you just get to that close date, which is a couple days later. And that's when you pop the champagne, get the keys, and just have a party and just have everyone over, have some fun. And those are the 8 steps.
Oh, man. No, actually, signing docs is one of our favorite parts. So if you're local to where our team is, again, we're based in Arizona at this time, but I grew up in Santa Cruz or from the Bay Area. Brandon's in San Jose, Silicon Valley. But a lot of times we'll go back and forth, and signing docs is one of the best parts. If you're in the office, we're able to do there. We'll bring, beverage of choice, maybe some balloons every now and then. If, it's fun and exciting. If you got kids, we'll bring some stuffed animals or something for them. Make them realize, like, hey, that's one of the coolest parts, because when you sign your docs, I remember last one we just had this client we got to hand the keys to the kids at the house, and they were like, why are we? And we got to be the ones that tell them, like, hey, this is your new home. The kids went crazy, right? They started running around the house. It was cute.
Give me goosebumps. You give me goosebumps.
They were stoked, man.
That's awesome.
Sweet, guys. All right. Well, let's get a little bit more technical into some of this stuff, right? So we give 8 steps, but let's dive in a little bit of the loan approval process. And this is honestly, I think this is one of the most daunting things. And Brandon probably covered it, but like people think like, oh my gosh, I got to sign my life away. I have to guarantee that I'm going to do something. Like, not at all. First of all, let me preface that. When you go through a conversation with somebody, if they're pressuring you, that's a problem. Never going to pressure somebody, but the conversation should be this, right? We have to have an open back and forth dialogue about what's going on. If it really gets complicated, we can give you some bullet points. But until we do see some information and really understand what your situation is very granular, it's hard to help someone and advise them on such a gigantic decision as buying a home, getting hundreds of thousands of dollars into a loan. I mean, and in some cases, borrowing 95+% of the value of an asset, right? Like if I want to go buy $1 million worth of stock, I need $1 million. Yeah. I want $1 million home. In some cases, I need 30 to 50K, right? It's a dramatically different conversation. So think about it like that too, as we go through this kind of understanding. So initially pre-approval, right? So, and this is just technical. We'll grab some basic financial information. We're going to verify debt, which is credit, income, savings, look through everything to kind of make sure you'll be pre-approved for a loan at a specific amount. 200 plus different guidelines and nuances, and everyone impacts the other one. That's what we're here for. We don't do that. If you're an engineer or in a job and you've been doing it for a long time, or you just got started and you went to school for it, dude, trust me, right? You're a master at what you do. We're a master at what we do. We're going to go over some documentation. So again, we're just going to verify. So we'll request some items from you, kind of go through that list. After this, just so you guys know, anyone that's part of this will follow up, but we'll send out an email for anyone. We'll offer a free consultation. Literally just have 30 minutes, talk to us about stuff, maybe ask some questions, and just see if it's the right time for you as well. So we'll get some information. We'll get some documents. Once we'll do that, we'll recalculate everything. We'll get the loan submitted over to kind of review, just to make sure that everything looks good. So in this case, it'd be my business partner. Eli would look at all the documentation, make sure it looks good, and then we'll do some loan strategy to figure it out. In that meantime, we're sending the loan over for approval, right? So what does that mean, right? So a lot of times people are like, what is the three types of pre-approvals? There's a pre-qualification. You could probably Google that and get a letter, right? It's not going to mean a whole lot because they have no idea what's going on behind the scenes. That's like hearing the sound of an engine not working, opening it and saying, you need a new engine, when maybe the air filter wasn't working, right? You don't actually know what's going on until you dive in. So the number two is going to be a pre-approval, right? And a pre-approval means we've looked at your income, your credit, your assets, and we said, hey, based on everything that you've provided at this point in time, looks like you'd be good for a loan amount for X, Y, and Z. The third one is a fully underwritten pre-approval, right? So these things called the underwriter, kind of like the gatekeepers for your loan. They're approved, licensed, trained for years to be able to actually say, hey, you're good to go. Loan's great, and we can close. So we're getting that done before you go into contract about 90+% of the time. So that's step 4. What happens is you go into contract, right? Those 8 steps, you bought the home, you make the offer, and now we're getting ready to get your final approval. We get documents, our closing package drawn. And this would include anything from the deed of trust they're created for the title company, who owns the house, how do you want the title? Like there's a million different nuances that come into it. And that's when we'll kind of prep your closing. Again, show up, maybe we have a good party, pop some champagne, like Brandon said, maybe give the keys to the kids and let them run around like rugrats and have a good time. And then we'll record. And this is the best part for Brandon. He gets to hand you the keys and says, you officially own this house. Welcome to 360 payment. No, I'm just kidding. To owning a house and having the leverage by getting this loan and going through this process, being educated, trusting the people, asking the questions, answering the questions, but also being someone that's willing to be coachable. Honestly, understand that there is a lot of nuances that come up. Sometimes they're good, sometimes they're bad, and we figure it out. So we kind of go through that all together. So Brandon, I know this is one of those favorite ones that you want to talk about, but let's dive into a couple facts. That's just, again, very high level overview of the pre-approval process. We can't get super duper granular in the timeline. At least if we did, it'd be a little boring. So let's talk about some fun stuff here.
Yeah, if you're people all the time, you say, I can't afford my dream home. And, there's so many different levels on this. But really at the end of the day, there is a way to get closer to your dream home and to buy your first home. But there's a process. We're going through the process right now, and you don't know until we get down the road. And so you actually have to, like we said earlier, make that decision. Hey, I'm going to buy a home. I think a lot of people that are here are already making that decision. But once you make that decision, that's when you can really start investigating and figure out what can really happen in your future. But I think the biggest thing where people get stuck is on the fear side is that they don't want to talk to a lender. They don't want to try to get their pre-approval. They're scared of what those numbers are going to come out as. But I will say I dealt with a lot of people who get stuck at that stage. And I'll ask you a question on this. But I would say 70% of the people I talk to get stuck there. And I would tell you the 30% that go through it and go down the path, they're either, whether they can afford their dream home or not, they're happy. They know, they have clarity. They know exactly what the next steps are. Okay, hey, you can't afford your dream home right now, but in 6 months, if you pay off this card, your car, and this, you're going to be able to get what you want. Can you do that? Sure. And so people know exactly what to do. They have a plan in place. In 6 months, you'll be able to get what you want. And other times, people are like, hey, you can buy a house tomorrow. So it's really figuring out, what can I actually do? What can I actually afford? And you just go down the steps that we're going through. And so I do have a question for you on this. I get it all the time. Hey, my lease is up in 8 months. When should I talk to a lender about my financial situation to get a pre-approval?
Then I think right at that time. I think this is the thing, right? It's you're not going and picking up a Honda, and you're not picking up a Snickers bar at the grocery store, right? There's a whole lot that goes into that, and that's never to be like, oh my God, it's a lot. And it is a lot to start it. Don't get me wrong, right? And that's why, honestly, it's also something that is not, I mean, I wish and hope everyone can buy real estate. Well, everybody, no. There's always the different people. They're the people that love this fear side and they just stick in it. But if you got 6 months, 8 months, a year, and you're like, hey, our lease is up, XYZ, like you said, 8 months from now, when should we start to talk to a lender and figure some stuff out? You should start right then. And for multiple reasons, right? I've had, I don't know how many conversations with people that are like, man, my credit's good, my income's good, I make this, I have this much cash, whatever. And then when we actually get into it, because what you have and what you think you have might not be viewed the same way from getting how you get a loan, right? So it's just have the conversations, prepare. Let's say you're 100% ready, you're in a great position, but we can get your credit score a little bit higher, right? And get you a little bit better of a deal. Or we can strategically plan for this type of loan product, or know that this stuff changes sometimes daily, weekly, monthly, no questions, to where we can kind of put you in a position to win. But now also when you're in our sphere of influence, you're getting updates. You're getting connected with on social media videos. You're getting connected with on market updates on a weekly or bi-weekly basis, or you just have somebody as a resource there. So I'm a big advocate. I mean, for example, Lauren and I had the first conversation, and again, I do this for a living, and we had our first like sit down, figure it out, 2 years, 2 years before we actually bought our house. So it's just knowing, cool, like where do I want to be? How do I get there? Now, 2 years is a lot to change. A lot of things can change. But I do know that because I knew how much money I wanted to have for that process, I knew roughly where we wanted to be in payment. We knew kind of an idea what that might get us in price point. But no, like the longer you wait, the harder it can get in some cases, because the best time to buy a house would have been in 1988, but the second best time would be now at this point. So I think the best part is just kind of get there. And you mentioned the 6 month thing, right? Like you mentioned, hey, maybe it's not now, like 6 months. We have a client right now. She's a couple months in and she got really, really discouraged. She couldn't afford anything she wanted to. She felt like she was going to have to force herself into a 1-bedroom condo, kind of this whole nuance. We're like, well, you don't need to. You just got like a second job in your situation. You're going to be able to save way more money. You're going to be in a way better position in 4 to 6 months than you are right now for this transaction. And as much as they emotional kind of distraught and kind of like, I can't do it, I can't win. You took 3 years to have the conversation. So you can't give yourself that much heart within 3 weeks. It doesn't happen, right? You took 3 years to talk. You got discouraged in 3 weeks, and literally in 6 months, the plan we're putting in place, she's like, one, I'll be able to afford about $150,000 more home than I can right now. And two, you'll be in a better position to where if the water heater needs to replace or something simple goes out, you're not going to be putting that on a credit card. So it's have the conversation, have the plan. Don't have the fear that you can't afford your dream home. And it doesn't have to be your dream home for forever. We have clients that have bought a condo, a townhome, a single, and now they're on their second or third single family in the last 4 or 5 years.
Yeah. And that's the total point of this is, you're most likely not going to, especially if you're in the Bay Area, you're most likely not going to start with your dream home. You may start with a 1-bedroom condo, maybe a 2-bedroom townhome, whatever it is. You're going to get into the home, whether it's a 1-bedroom, 2-bedroom, whatever it is. You're going to build that equity up, build that appreciation up. You're going to move to the next level. And then you're going to go to that 3-bedroom townhome. And then you're going to move up to the next level. You're going to go to that starter level, single family. And you're going to keep building equity and it's going to keep appreciating. Bay Area is one of the most appreciating areas in the entire world, really. And eventually you'll get to that point where you are in your dream home. And that's the ultimate goal of this.
Yeah. Last story on that, my favorite story about this is actually my business partner, and he couldn't be on tonight, but he bought his first house in like 2012 for like $380,000 with 10 grand from his parents and paid for closing costs for down payment. They bought the house 4 years later. They sold it, made $50K, went and bought a brand new home for about $480,000. And due to the market since 2017, they're sitting on well over $500,000 worth of net equity from a $10,000 loan from his parents. So
all leverage.
Things here, guys. Plenty of opportunity. No questions. Let's do the quick next one. All right. Fear. I should have waited until the market gets better. And his fact is the right home might be around the corner. again, fact on this could be anything. But
Yeah.
and I think we covered some of this just now, but I should wait till the market gets better. What is the definition of better, right? Like, what is the definition of better for somebody? Or I'm going to wait for the market to crash. Sorry, that's not happening. I can give you a bazillion data points of why that's not going to happen. Two, it's like, what are you waiting for outside of your own decision, right? And that's not a pressure tactic. That's literally just understand, right? I know from ourselves that we bought our house and we have close to $100,000 in equity on our new build. Like, if I hadn't spent that money or prepped that time, or took 2 years and then a year of building it and all this stuff, like, we wouldn't have that. And the fact of owning this house, we woke up for months, and even now, almost 9 months in, it's like, are we in an Airbnb, right? So the market, a lot of people would have said, was getting really bad. Rates were starting to spike, quote unquote, right? And so we're starting to see this. Home prices were going to crash and slow down. And I was like, no, like, we're just going to do everything. Craziest part is, even in the last 12 months when that happened, you still saw anywhere between 3 and 8% appreciation, depending on most of your marketplaces.
Yeah.
So 3% on whatever size home you have is still better than 8% net inflation negative on the money you're sitting in your bank account.
Yep. Or the stock market the last couple of years.
In the last 18 months, stock market on average has lost between 18 and 27%.
Yep.
So
look at the difference.
Housing did not.
No.
Perfect. Well, on that note, actually, we're going to dive into a few of these facts. So we've talked about the home buying process, a little bit of how to get a loan, right? Talked about the people. We've set some precedents of who we are, what we do to help people. Now let's share a little bit of some of the data, right? So housing inventory. So Brandon, I know this is a cool one, right? So we talk about inventory, which right now, crazy low inventory, right?
Unbelievable.
Even in the Silicon Valley, right? I think I saw something the other day said that Fremont had like less than 70 homes for sale.
Yeah, I actually have it right here. Santa Clara County, I just checked right before we got on here. 626 homes for sale in the entire county of about 2 million people and about 700,000 units. So, do the math there. How much is available?
So how many listings are available?
626.
626 homes divided by 2 million people.
Yep.
That's crazy.
Yeah.
Right?
Yep.
Like, and the thing about that is that's a national problem, right now.
Yeah.
And I can get into the why, and we can talk about inventory, but this is a really good image. Just one here on this left-hand side. Whoops, I just clicked the button. The left-hand side here is existing inventory from the years of 1999 to 2023, guys. So we talk about this, right? Is in 2000, think about this. So this 2 is in millions, FYI, right? So this million marker right here. So we had in 2007, 2008, the reason that there was a lot of issues, it was oversaturated in amount of homes. We had 4 million homes in 2007, right? And we had about half as many people that were looking to buy properties, by the way. So we actually get through like, housing formations and families, and the inventory being not created by kids moving out of families, but inventory desires needing it, right? So this is one of the reasons we had way too many homes. So guidelines and loans and all that stuff didn't have all the regulations we do now to safekeeping, to keep you protected 90% of the time. That is why all these laws are put into place. The other 10% is to make sure lenders also have a little bit of protection for themselves and they're not writing stupid loans.
Yeah.
So that's why we had this, and we had this drop. So housing got nuts. What's crazy here is right now, and I think this number is actually high, it shows you inventory about 980,000. Well, drop down to this bottom one with the real story, right? An example, this chart is a few months old. Don't get at me about it, but it's like January, February data. Stuff doesn't update yesterday. So existing home inventory, if there was 980,000 homes, there was actually 400,000 of them under contract. So that means there's only 578,000 homes. Remind me how many people live in the United States. Wait, we just saw 626 homes in Santa Clara, right, with 2 million people. We're talking around 600,000 homes for 300 plus million people. So if we just go to Economics 101, let me know if the market is going to crash when there's not enough to take, right? And then this right-hand one here, I love this because it goes in 2012. People are like, hey, appreciation, market, all this stuff. 2012, right? The media too was talking about the market's going to crash, market's going to crash, market's going to crash, because their perception was only 4 or 5 years old. In 2012, the following year, the average home appreciated 8% over the next
Insane.
year after the quote unquote bottom of 2012, even when there was 2.4 million homes on the market, it went up 8%. Remember, we have under 600,000 at this point in time.
Yeah. And even then, the population was even lower.
Correct. And I don't have a slide that we went into that, but they're talking about we've increased we're about 5+ million homes behind demand.
Yeah.
Housing.
Yeah. And those are the basic, the first thing you learn in economics, supply versus demand. And, where does that lead us? And I actually have some, recent stats here from Yahoo Finance.
Okay.
National home price increases for the first time in 7 months in February. So that's the most recent data we have nationally. But that may be the new bottom. If that, I have a very strong feeling that is. But we did have a 7-month decline, and there was a very good reason for that. As we saw the demand dwindle due to rates more than doubling out of nowhere. And then one other thing that I read that was really interesting that kind of goes to this. Everyone thinks the market's going to crash and no one's buying. Why wasn't anyone buying? All these investors are going to sell. I don't think why would anyone sell right now? There's no reason. And I just read that BlackRock earlier this month put together the biggest real estate fund ever to date to buy residential and small commercial real estate.
Correct.
But mainly residential real estate. The biggest fund ever. So if the biggest fund ever is buying real estate,
why wouldn't you?
Why wouldn't you? Right? It might not be a bad time. So you gotta follow the smart money. You really do. Couple other stats here. The sale price to list price ratio. Homes are selling 102% over list. So homes are not selling under list price anymore. It's just not happening. It hasn't really happened since about that February mark. And we're seeing a decline in days on market. We were almost 40 days a couple months ago. And on average, it's about 24 days on market. But I will say any home in the Bay Area that's getting listed, that's priced correctly, is selling in a week, unless it's in the luxury market. So those numbers are a little skewed, but I would say about 5-7 days in a normal market. It's spring market. It's heating up. It's kind of feeling a little bit like 2021, 2017-ish feelings, which is always a good sign. Always a good sign.
Can't complain. It's kind of time of year, right? And note when you guys hear and I love these charts. Actually, this information comes from a phenomenal resource that I think every lender on the planet should be using called MBS Highway. Phenomenal. I mean, the owner, kind of creator of MBS Highway, Barry Habib, is an absolute genius when it comes to this stuff. So shout out to Barry Habib, MBS Highway, and their team for the data points. So appreciate you guys. Let's get into a little bit next one. Talk about some mortgage interest rates, right? Again, information here from MBS Highway. And some of this information would be from also Mortgage News Daily. I'm going to bring a separate slide in just a second. But one of the things for you guys to note here, which is always really interesting to me, is kind of this image here talks about interest rates, which talks about core inflation. So this is a inflationary kind of image. And think about this, right? So mortgage interest rates and inflation, they're about as anti each other as physically possible. They are literally positive and negative magnets. They're like, nope, they don't want anything to do with each other. And so when inflation goes up, interest rates go up, right? And so when interest rates go up and inflation goes up, the Feds have to increase what's called the Fed fund rate. The Fed fund rate has nothing to do with mortgage interest rates, by the way. So when they do that, stop thinking it's rates, please. And so what happens is the Fed fund rate makes everything but mortgage interest rates get more expensive, right? And so it starts to put pressure on people spending less money. The cost of money goes through the roof. right? So when you spike the cost of money, well, less people tend to borrow the money that costs them way more because they feel the pressure and they can't afford the payments, or businesses can't borrow enough money to cash flow, and investors can't buy enough money to cash flow. Like, you get the point, right? So, but the biggest thing about the CPI core index inflationary number here is shelter cost. It's 41% of the entire inflation code number here. But the thing about this is the Feds do this wonderful thing and look in their rearview mirror. They aren't looking forward and projecting and looking at the data like a lot of the experts are. So unfortunately, this number is about 13 months. And actually, Barry, this is the data we got from him. It's about 13 to 14 months lagging. What does it mean for you guys? Well, right now, this is where we are, right? So the cost of rents and homes has gone down historically. Again, homes may go up in different marketplaces. Don't get me wrong. San Francisco Bay Area, absolutely. Phoenix market's going to be a little bit more chill where we're at this time. But it depends on where you are. If you're in the middle of nowhere, Nebraska, I have no idea what your market's going to do. Right? So the cost of everything, housing, is going down. And so we're all kind of like on this ride. So the economics sees it, but the Feds have like a fat mirror here and they're looking back and they say, no, it's still increasing. Right? You know that feeling on a roller coaster, right, dude, where you're like, you're going up, up, up. You're like, oh my gosh. You get to the top, it's kind of like, this is nice. And you're like, oh boy. And then you feel that feeling, right? It'll kind of fall through.
Yep.
So it's interesting to kind of think about that when you see it. So if we use current market as an opportunity, right? Now, this slide, again, is a slightly old, so depending on where you are, and I mean old by like literally like 90 days. Like, it's not dramatic, but that's how fast the real estate market can and has over the last several years changed. So if you use this as an example, and let's say a home value is $500,000 and there's a $400,000 mortgage, but holy cow, rates have gone up 1%. World's over, can't afford it, not worth it, 6% interest rates. Yeah, I mean, sure, but I just quoted 5.5 this morning, so we'll talk about that.
There we go.
Monthly payment increases. If your mortgage were to go up by 1% in a $400,000 mortgage, your payment would increase by $257, right? Okay, that seems not that bad, but it does for some people. Increase over the year means you spend over $3,000 more for the same house, nothing changed for that mortgage payment. But here's the opportunity. In some cases, like you just said, maybe not in the Silicon Valley market, specifically downtown Santa Clara, maybe not, but depending on the house or the fixture that you might have right now for your listing, right? Or different opportunities, maybe you get a small discount on the house. And I only say small discount because they're not spiking at 20% appreciation rates anymore, right? So let's say you get $10,000 off. You know, again, if prices continue to rise, we'll see about a 3% appreciation, which will give you about $15,000. And the cost for a higher rate, plus maybe a couple $1,000 to do the refi, you spend about $5,000 more on the mortgage and to refinance later when mortgage rates come down. I'm going to explain a date that you should be watching out for. You still benefit in this case, in reality, about $20K, which is still a 5% benefit, more than you would have benefited if rates were lower, because now you have to pay 5-10% over the house price. And like you said, 102. So we're already dipping into that 5% benefits now about 3% because of the shift in the market happening. Yep. So, but one thing I always like, man, like, how many times do you get asked the question, like, what are mortgage rates?
Every day? Every couple hours?
Every couple hours, right. Absolutely. So this is a chart. Now, everybody can look at this. Can you see this chart by chance? No, you cannot. Okay.
I cannot. I can just see the presentation.
I always screen lay this out, actually. It's a really good way. Move from stream, full screen layout. Nope, that's not what I wanted to do.
Yeah, no, I definitely get that conversation every day. And the first thing I say is talk to Bryce. Because it's not, you know, at the end of the day, it's not, there's so many strategies that we're going to talk about here, but it's not just what that rate is, not what that average rate is. It's very customized to you and your plan and your goal.
Yeah, man. It's a thing. So totally understand that though. All right. So here's what I wanted to do for you guys is show you something. This is live. You can look this information up, mortgagenewsdaily.com. And it's a really good resource to just kind of like have a bullet point. You can kind of see all kinds of different things. It's mortgage rates, mortgage news, mortgage updates, all this stuff. If you're technical, great site. If you're just like, what's going on? Here's a pulse. But one thing you're going to notice is, let's look at Mortgage Daily News, right? Freddie Mac, that's a federal entity, and Mortgage Bankers Association, one of the most revered industry organizations within the mortgage world. You can notice one thing is that actually for the first time, this is super rare, you have 6.43, 6.43, 6.67, right? Again, and I quoted some rates today that were in the mid fives. So it kind of just depends who the lender is. But you'll look through this, and why is everything on this chart different? Except for those two randomly, because it never happens. But like, why is none of the rates match? Why is the previous increase all different? How did this go down? And it's the only thing, like 1 year low, like you start to think about that. Like, why would interest rates look different if they're interest rates, right? Well, here's the thing. When it comes to reporting, when it comes to cost of funds, it's just a matter of the information that's being put into the reporting, right? If I go pull the 10 lowest interest rates on the market, I'm like, oh, average rate is this. And then you get a quote and you're like, why is this 0.5% higher than what I just saw as the average? Well, they just took the average of the lowest 10, or vice versa. That's the highest, right? So it's a perception perspective. The thing about rates is they change all the time. And think of this, your mortgage is a tool. Don't think of this as like a thing that I'm locking myself into forever. It's a tool that you use to buy an asset. The tool changes. You might need to buy the house and you're like, cool, I need a chainsaw. Awesome. Well, maybe a year later, you're like, hey, we want to refinance and lower our payment or pull some cash out of the property and, remodel the kitchen or put our kid through college or whatever it might be. And the tool changes. And maybe it's a jackhammer and then becomes a hammer. And then I need a nail gun. And like, think about the fact it's a tool. So look at the rates, but know that they change all the time. They constantly adjust and they're never fixed. So I always like to bring this up because it's like, it's changing, but here's the date you need to look for. And I left you guys cliffhanging on this one. May 10th. Write that one down. May 10th. May 10th is going to be one of the most important days that we have in 2023 when it comes to the mortgage interest world. And here's why. This number will start to have this hit the top and it'll start to come on down. So we'll start to see a lot of adjustments. We most likely will see interest rates come back down. We'll start to see more pickup. But note, when rates go down, prices go up. It's a seesaw. They never snap. Otherwise, there's this thing called breaking, and that happened one time. So that's a really good kind of bullet point.
Good
you
to
like
know.
that?
What's your outlook for the rest of the year on rates?
I mean, you're the right type of lenders, things like that. You'll probably see high fours to mid fives. We're going to be right there. If you're a high risk borrower, you're probably still going to see sixes. But I mean, for the most part, look at the payment, right? It's payment strategies. I have a client today. We just went into contract, and they're actually making their mortgage payment is going to be based off of an interest rate of 4.5 today. Wow. Yep. Wow. So it's possible. Have the conversations, different strategies in play.
Yep, exactly.
So I love this one. That's kind of it, man. Like we just dropped some facts on the home buying process, the journey. There's a lot of different things when it comes into real estate. I think the most questions, and you and I both think, is like kind of like the mortgage process, like how to buy a home, right? We all see the cookie. So I think that's one of those things that comes into it as well. One of the questions that I did see here is actually for you, Brandon. I'm going to probably put this on here. But they said, hey, what do you think is going to happen to Silicon Valley real estate in the rest of the year?
Ooh, I like that question. Rest of the year, that's a great question. From April on, what we typically see is the real estate cycle is the same. Nationally, Silicon Valley, everything, same.
Yeah.
We see spring, it always goes up. A lot more activity. Everyone gets ready their house to sell. Not everyone puts it on the market. We don't have enough supply to oversupply anyway. and then everyone wants to buy a house. So everyone, your brother, your sister, your cousin, you talk to one person, you're going to find out someone that's buying a house in spring. So with that, there's a lot of offers, a lot of competition, and that's exactly what we're seeing right now. So
Yeah.
it's a very competitive market in spring. Cools down a little bit in the summer, and this is just typical because people go on vacation. People,
Yeah.
their kids are out of school. All right, let's go to Hawaii or wherever we're going, and there's a little less demand.
Sign me up.
Um, and then exactly. And then once we get right before the school year starts, everyone's like, "All right, I got to find a house to get into a school district and do this and do that." And the fall heats up a little more. And then once Thanksgiving comes around, everyone forgets about real estate. Everyone's going to parties, hanging out with their friends and family, which we all should be doing, celebrating our, whatever holidays we celebrate.
Yeah.
This is what we do in America. Once January 1 rolls back around, this is when everyone sets resolutions, thinks about buying a house in spring. And then the cycle repeats and repeats and repeats.
Yep.
So, with that being said, my personal forecast for the rest of this year is I think real estate in the Silicon Valley specifically is going to go up at least 5%
Mhm.
overall for the rest of the year, with it bringing around total from January on about 8%. And that's just kind of what we average anyway. So it's not that outlandish of
Mhm.
a thing to say, especially since that we're down right now year over year about 10 to 15%, depending on the market, just because
Right.
of how much prices went up last year.
Right.
San Jose took about a 20% hit total in about just 6 months, which is pretty insane to think about. And so, since prices came down that much, going up 5% is really not, it's really not that much. But the prices coming down made a lot of sense. But now that we kind of hit this real reset button, prices, really bottoming out in February, January in some markets. I can only see it really going up from here,
Yep.
unless there's some economic factors that can change. Um, but if everything goes as kind of expected, then I can only see prices going up here. And then that's what's so important about this conversation we're having right now is talk to a lender, figure out what you can do today or tomorrow, but set an
Mhm.
appointment today because you're not going to do it tomorrow. This is usually what happens. And just have that conversation because I can't help you unless you have that financial conversation. We can go out, look at homes, we can write offers and everything, and we can have all this fun. But until you talk to a lender, have that financial conversation, I can't help you. There's nothing I can do. I can't get you into a home without that financial conversation. So that's why that piece is so important, and that's why I work with Bryce, and that's why we do these kind of webinars to teach people really about that process because it looks complicated on the outside, but once you go down that path, it's a lot
Yep.
more simple than it looks. Um,
100%.
so yeah,
I love it, man. No, I think it's good. I forget actually when we created this, I was like, did we? No, we didn't make another one. So it's Q and A's on here for us. So I've actually kind of funny. I've had a few people text me that are watching this, but they didn't comment online, so they sent me.
yeah,
I've had a couple of funny ones here. I actually had a buddy ask me if he could hop on and ask you a question about Dave Ramsey and see if he could give FHA buyers a reason to buy a home. So it's actually interesting to kind of think about it, actually dive a little bit into that FHA question. He's partially trying to be a smartass, but I'm actually
yeah,
going to answer it properly. But, the FHA loans that come through, I mean, you kind of think about that. There's been some changes for them as we answer that question is FHA loans have kind of come into play where there's a lot of less premiums, like insurance got cheaper, mortgage insurance got cheaper, rates are way better in some cases than conventional lending, but there's a bad rap for FHA because there's some technicalities. So I think it's just understand the type of property you're looking at, what does the loan look like, what does the payment look like. I mean, that's one thing that people think is really when it gets into it, the loan type, product, and resources, it's very strategic for each person. And I think that's frustrating is a lot of lenders and a lot of real estate agents are just kind of, here you go, here's a rate, right? Unfortunately, and we don't, and I'll tell you this, we don't win every conversation we have. We don't have this dialogue with everyone. I had a conversation with a buyer this last week who was an FHA buyer, but they're like, hey, products did you loan types, what down payments, like what kind of strategy was put together? Like, we got given a pre-approval letter. I was like, cool. Well, here's kind of what we would do for you, right? Talk about appreciation, talk about the numbers, talk about the emotions, put together a strategy, understand maybe 3 or 4 different types of loan products that might work for you, show you different price points and payment ranges, and really just kind of showcase, like, is that something you're open to? Like, do you want to know your options? Love it. Absolutely great. Perfect. But they were also stuck on this thing. They're like, hey, do you think you can beat 6.5%? I was like, what are you talking about? They're like, well, that's what we got offered. And that's kind of the payment that we saw that would work for us. I was like, well, absolutely. And like I just told you, we have a client today that has 4.5. I was like, I'll show you a payment strategy that actually works for you a little bit more effectively. Might get you 2 or 3% underneath kind of what you're doing, right? They had a massive down payment that was also a gift from family. So different ways to do it. And I think the interesting part about that was, about a couple of days later, got an email and said, hey, you know what? Thanks for all the things. We decided to stick with the real estate agent that we're working with. And they have some lenders they want us to talk to. I was like, perfect. So the person who didn't give you the resources that you needed, that didn't give you a strategy that actually made sense for you, that was the person that we wanted to talk to. And at the end of the day, like, we're not here to convince somebody that that's a good or bad situation for them, but it's to give them the information and educate them so they can make the best decision for themselves.
Yep.
Right. So it's never if you ever feel sold by somebody in this process, you're working with the wrong person. You're working with the wrong people. This is an education thing. Right. And so at the end of the day, too, like, nobody gets compensated unless you achieve your dream. Right. And you need to achieve your dream. I think the worst thing on the planet going through that and kind of the way is to ever have the feeling that someone didn't know what was happening because you didn't tell them, or they didn't feel like they got the best scenario or options because you didn't tell them. Right. Yeah. So, but you can't win everything. So FHA buyers still have a really good opportunity, even in a market like this, due to the question, but it really just depends on the scenario and kind of the situation going on with that property.
Yeah, I've dealt with many properties for buyers where I'm like, you should not buy this house. And I know there's plenty of agents who will say, won't say that. And it's a hard conversation to have, especially when your income is due to them achieving their goal. And, that's why some of these agents are leaving the business, because all they see is when they look at that house, that's a paycheck. And what we have to do, and what we do, me and you, is we see this and say, that's not the right plan for you. You don't want that. And it's a tough conversation to have because, they think they want it, but we talked about your needs. This doesn't fit your needs. And if it doesn't fit your needs, I'm not going to help you do that. And, it's tough sometimes because they really want it. But, it's those conversations you really have to have that, what is that plan that you need, not what you want. And make sure you work with those people that are going to advise you the right way, right? So, yeah, that's definitely something I've seen a lot. One question I've gotten a lot recently, I don't know if you can even answer this because I don't even know, because I've tried to research it myself. I can't find anything about it.
Yeah.
People are asking me about 40-year mortgages, and I'm like, I have no idea. I've never heard of it. I saw a news article on it, and I haven't seen anything since. Yeah. So I was kind of curious to see if you knew anything about it, if you had heard anything.
Yeah, it was, just kind of like the announcement going on right now. There's always something the media wants to drive some highly infactual data because it pulls emotion and triggers, or it's like, oh, I can get a 40-year loan. So 40-year FHA loans is the article that everyone was reading about. And those loans are not for origination purposes. So what it is, it's the FHA, the Federal Housing Administration, offers a 40-year loan modification. They did this, they do this often, but they kind of brought back the 40-year term purely because just the cost of buying a house has gone up, or maybe someone who's living on Social Security, or didn't plan for retirement properly, or didn't have an opportunity, or something like that. They get the opportunity to modify their mortgage to just make the payment a little bit lower and kind of drag things out in the essence of time. So origination loans, there are some, they're called non-QM. They're non-qualified mortgages, meaning they're not backed by the federal government. They're not backed by typical traditional investors that will do what's called 40-year IO terms. And so they're 40-year loan based on interest only. But what happens is they're going to be 10 years interest only, and then they're a 30-year fixed term. So those are the only types of 40-year loans that really come into play. But again, a lot of those are typically for investors or someone that maybe has high cash, a type of thing, or really high income and just wants to keep low. So it's just strategic strategy, just really depends. So the 40-year term loan, it's not for an origination purpose. If it were, no offense, the risk factor to that would actually be the interest rate would probably be so high the payment wouldn't really be that much different. So, 40 years is a long term, right? So 30 years is a strategic timeline due to how long houses have, how long they last, what timeline is next, like how long someone's going to live or live in them. So there's a lot of data that goes into how they got to the 30-year term. So 40-year is a 40-year modification based on the question that you're asking.
Good to know. Good to know. Yeah, I got that quite a bit recently, so I just thought I'd ask. I think those are kind of the main question. I mean, we've kind of covered all the main questions that I get a lot. Hey, what are the rates today? Hey, if I have this credit score, what are my rates going to be? And
Yep.
I always tell them, hey, it's in this range, and you can go lower, you can go higher, but you really have to talk to someone who knows what they're doing, like Bryce, and figure that out. Because there's no way for me to tell you anything about what your rate's going to be until you go down that route.
I like how you said it too. It's your interest rate. Like it has sure to do with the lender. Like there might be what are their rates because of their kind of guidelines and margins and all this other stuff, right? But at the end of the day, it's you as a buyer, right? So it's what is your scenario? How does that work? Put it together. There are dozens of different things that can impact a interest rate. And if one changes, it could domino affect 3 or 4 others. So it's kind of putting together that puzzle piece and really understanding it, making sure everything works. But that's what we're here for. Make it easy. Like I said, I think, I went over a few of the questions, got everything here. I know we had blocked off 5 to 7.
Yeah.
But, it looks like we have gotten through everything and all the questions. We just wanted to make sure have that time.
I think we dialed that in so quick. We're just so efficient. So I think that's a good thing. I don't know how long people have attention spans anymore. So I don't know about a 2-hour show anyway.
I think we're good, brother. But man, any last things that you want to leave everyone out here with?
I will just say a couple last things for first-time buyers. Make sure you reach out, especially if you have any more questions in terms of the market, anything about the home buying process. If you want to do a one-on-one, more specifically, go to those QR codes we have. Just shoot us a message on whatever social account you're on right now. Just shoot us a message, say, hey, we're interested. And, we can even set up a time where we can do a 3-way call and, figure out what the best plan is for you. So definitely do that. Definitely go to the mortgagenewsdaily.com if you want to really figure out those rates. That's going to be one of the best ways. I even use it because I saw it from him and I was like, wow, this is great. I don't have to keep looking it up and not knowing what to click on. So that one's great. And that's pretty much it. The lowest condo listing I saw in Santa Clara County was $418,000. Just so anyone knows, it's not impossible to buy a condo in the Bay Area. It's very possible. So just make that decision today. Make sure you make that decision, and make that next step because that's really the most important thing for you.
Absolutely, brother, man. Well, awesome, Brandon. Thanks to everyone that was on here. Some of the questions that came through, some of the ones that came through the text message. But we'll go ahead and post this. Let us know in the comments. We'll be following via messages to all of the invites that went out. Thank you to the 180 of you that were a part of this whole process today. We're looking forward to connecting with you and just sharing some more value. So hope everyone has a phenomenal Thursday, and you guys have a great evening.
All right.